Tomorrow we have the first of two major inflationary numbers coming out, that being core and regular headline PPI. This is the Producer Price Index, and it will give us some insights into inflation here in the United States, which is a key market mover right now. And in this video, I'm going to go through my game plan for the next 2 days, what I'm looking to trade, what I'm looking for in the numbers, and let's jump in. So first of all, I want to start out with the big stuff. I'm currently long the dollar against the Japanese yen. And if you've been watching my channel for a little bit now, you know recently I've been pretty bullish on the dollar against, well, the dollar in general, but specifically I've been pretty bearish Japanese yen. And I want to break this one down for you so you understand where I'm coming with on this one, and also acknowledge the risks with my trade. The first obvious risk is that the Bank of Japan has been pretty vocal that they don't like where the currency exchange is at, and they may be willing to intervene. However, is that enough to scare me out of a bullish trade? Obviously not, since I am long as of around yesterday at about 9 p.m. US Eastern. I picked up a trade early Asian session, and I want to walk through the breakdown. Now, first, from a technical perspective, I'm long as of this area holding. 148.40 was a strong bounce point for this overall upward trend, and I continue to want to be a buyer in this market until something changes with this market. Now, again, we saw this big, ugly green red candle here after just a sea of green, and this was, of course, the Bank of Japan's intervention kind of concerns hitting the market, and we saw the yen strengthen. But you can see the market is not necessarily fully buying it. Obviously, if they truly believed that the Bank of Japan was just going to massively strengthen the yen, we'd be trading much lower than where we currently are, and the dollar strength is still a very real presence. In fact, who else thinks that the dollar is strong? Well, none other than big money. And I want to show you this real quick on the smart money tracker. We can take a look at this and we can see that in terms of net institutional positioning, this is talking about hedge funds, banks, money managers. They currently, as of an aggregate number, generally are bearish on the Japanese yen. You can see a long to short ratio on the futures market. According to the CFTC's commitment of traders data, 77% of those positions that have been filed are on the short side. And if you flip the script and you take a look at the dollar specifically, what you can see is a lot more blue. In this case, there is about 75% of institutional positioning here is on the long side. So clearly there's a stark difference. But on top of that, I want to show you guys something really cool. So if I go to the FX majors section here, and then we switch this chart to dollar Japanese yen to get a reading here, I want to show you something really cool. So you can see that under the COT data, we're getting a really bullish reading on the dollar yen. And this +3 just shows some extra positive boost. But if we break this down, you can see that percentage that we just mentioned. 75% of positions are long in the US dollar and 77% are short on the Japanese yen. But then look at the recent change column as well. As of the latest filing, we've seen a big increase in dollar bullishness and a decrease in yen, basically in an increase in bearishness on the Japanese yen. So I think we have the wind in our sails so far in terms of what smart money is saying, but let's look around the room a little bit more. Retail traders are 76% short. That's a bullish signal, as retail traders tend to lose money. Seasonality suggests that the month of October is historically a positive month for the dollar yen. That's a bullish factor. Trend reading is very clearly to the upside right now, as we saw on that daily and 4-hour chart. GDP growth, inflation, interest rates all favor the US economically, and the labor market doesn't really give us too much of a clear picture. So again, what we can see here is that we're getting a really bullish reading off the EDGEFINDER. So I saw that, I saw the pullback, and I picked it up long, and so far we're floating a really nice, just about a 1-to-1 risk to reward. Now let's talk about the risks. We have CPI and PPI coming out this week, which will likely cause some volatility. If price does plummet underneath this support level, that's going to be my cue to go ahead and cut my trade. And likely what will have happened in that situation is we would have gotten a cooler than expected inflationary number. Now, if that happens, it happens, but I don't know the future. And right now I'm just measuring my risk reward based on what I just showed you from the EDGEFINDER's report. So I'll stay bullish dollar yen as we go into this week with the willingness to get out of my trade if things change for the worse in this case for my dollar yen position, etc. So that is a trade that I am currently in myself and watching throughout this week as we go into the CPI and PPI numbers. Now, on top of that, I want to talk about indices, because indices are possibly the most interesting spot in the market for me right now. If we take a look at this S&P 500 chart, we can see that 4350 to 4365 has been historically a pretty key level of resistance looking left on the chart. You can see we had a huge level of support here that held, and with this breakout to the downside as we retested, the question is, are sellers going to be able to hold it? And it's not looking promising so far. It does seem like the S&P 500 wants to rally, but again, I think we need to be cautious ahead of inflationary numbers. But I want to show you something really quick on the EDGEFINDER. The EDGEFINDER for weeks now has been pretty bearish on the indices. It's been calling for downside on the S&P 500. The NASDAQ and the Dow. We get a -7 score right now, which is a pretty dang bearish reading. However, I want to show you something really key here. When we take a look at the inflation statistics, we see a -3 being present here. That's a big draw. That's a big kind of weight on the score of the EDGEFINDER. If we get inflationary numbers, and by the way, I have no short positions on the S&P 500. In fact, I have contracts, options contracts that I've sold puts on for the S&P, as well as the Russell and the Dow Jones. If you don't know what all that means, basically I'm bullish longer term, and I've sold options for premium. If you're familiar with that, if you're not, basically I'm bullish longer term on the indices by the options trades that I'm doing. And in terms of the inflationary numbers that we see here, if we get a cool CPI number this week, it's very likely that this number could drastically change the score of the EDGEFINDER. If this became a +3, for example, and let's say that retail sentiment became a +1, meaning retail traders started to short the rally kind of thing, which is likely to happen as we're very close to that 58% getting up into the threshold, which is 60, by the way, it's possible that we could get some bullish readings here and maybe see this thing flip more into a bullish territory. Here's the score indicator over time. You can see it's been bearish for weeks and weeks and weeks. And if you've been riding that move, then congratulations. The EDGEFINDER has been pretty rock solid on indices, as well as the US dollar crosses in the last few weeks. So when it comes to the indices, I'm watching very closely. If we're able to get some cooling inflationary numbers, it's possible we see the EDGEFINDER start to flip bullish. And in that case, I'll probably be looking for bullish setups myself. Very, very high on my watch list. I want to also go to gold and talk a little bit about this. Gold has found what seems to be a short-term bounce, but I'm still pretty bearish. And the reason for that, and, again, inflationary numbers could come out and change everything. But in terms of gold, we'll go to the gold scanner page for a second. We get a -7 on the EDGEFINDER, which again has been a bearish reading for quite some time. We've seen the decline in gold market do very, very well on the EDGEFINDER. You can see what this is showing you, by the way. This chart is the score indicator showing the score that the EDGEFINDER was giving relative to the price in white that the gold market actually traded. So it was bearish and called this whole downward trend, which has been awesome. But in terms of the scoring, commitment of traders data is very bearish for gold. You can see we saw a decrease in gold bullishness. In fact, actually, that's a bearish week, right? In terms of change, we saw a bullish week in terms of the dollar. So there's a lot of pressure here to the downside on gold in terms of what institutional money is up to. You also have retail traders really piling into a long trade when it comes to gold, and that is incredibly concerning to me. When you see retail traders piling into the one side of a trade, I'm usually on the other side. So I'm pretty tentatively bearish on gold at this current moment, and I'll watch this one closely. From a price action perspective, however, again, if we do start to see price retrace up into this 50 to 61.8% zone, I think sellers are going to probably want to take it from there and continue to push things lower. I also want to mention seasonality briefly here. Seasonality does not seem very optimistic for gold going into the October, November months. So again, not a bunch of bullishness there for me on the gold side of things. In fact, probably more on the bearish camp until we get into the new year where we see seasonally a nice surge in the gold market. So again, that is what I am watching for when it comes to the gold market. I hope this video was helpful to you. And I do also want to say, if you guys would like a copy of the EDGEFINDER, you can get one for a discounted price. If you made it to the end of this video, I have some cool and extra news for you. If you click the link down below in the description, it will take you to our direct message center. When you click this and you click chat now, you'll get some extra discounts by messaging in. One of our support reps will help you out. You can click EDGEFINDER 15% discount and info, and you can chat directly with someone on my staff about our software that we offer. Again, the EDGEFINDER is a tool built by our team here at A1 Trading. We're a software company out of Atlanta, Georgia. And if you'd like a copy to our tool, we'd invite you to check it out, tour it with a representative here, or just find out pricing details and options that we have available by messaging us down below. Last thing I will say is make sure to join our free Telegram channel. It's also linked down below in the description. We'll be dropping some cool perks and some analysis each and every day on that channel. Thanks guys for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.